Let's go to the question answer of double taxation avoidance agreement. This is the first time that we are doing questions in class, correct? Hello. We finished 2 chapters, but questions we are doing for the first time because in introduction we did only tax rates. So the tax rates will be tested here only. Calculate tax liability. Like some people did 397 instead of 397 800. That means already you are wrong in sums of question 1. Now time has come to do sums of question 2. Officially we are doing questions for the first time. And there is a certain way, a manner in which I do questions in class. Please listen. We have this year released a separate book on question answers, like a compilation of questions. I think I must have told you about it. Over the years, my book covers more practical questions than anybody else in my subject. But the thing is that my theory and questions were merged in one book itself. Theory questions. And students are coming and asking, sir, why don't you release a question answer book like other people? My question book has got more questions than them anyways, so I just had to segregate it from the theory book. You all have the question book with you. That is the only book that will be required in classroom study. In classroom study, I never need the theory book. Entire Income Tax Act is saved here. I will need only your question answer book while we solve questions. Every time we do questions of any chapter, we will start with that chapter, and somebody from this classroom has to act as a disciplined volunteer. What kind of volunteer, sir? All you are required to, because I don't have any hard copy, any material, anything with me. I don't have anything. Okay. So what you will have to do is, one of the students of the classroom will have to come on the mic and read the question, and then solving part we will be doing together. Somebody has to volunteer to do that. Okay. Anybody willing to do that? Yes, Anshika, please. Thank you. Thank you so much. We will go to the first question of DTAA chapter. Take a second. We will go to the first question of DTAA, which is on in your question answer book, page number definitions. Listen, listen. When I do questions on page number 2, I will not say page number 2, I will say page number definitions. Page number 6 will not be page number 6, it will be page number residential status. Page number 10 will not be page number 10, it will be page number exempt income. Page number 11 will be page number charitable trust. Page number 45 will be page number capital gains. Page number 56 will be page number IFOS. You all got a hint about what I am talking actually? What am I referring to? What stupid? Listen, when I look at a vehicle number, say there is a Gadi number 2856. For a normal human being, this is just a number 2856 double. For me, this is PGBP and capital gains. What is the vehicle number? PGBP capital gains. I look at numbers like this. If answer, sir, how do you remember all the sections number or all the section numbers so comfortably? That you need to develop that much affection for those numbers. So as simple as that question, and you may find it funny today. You're like, sir, page number 2 is page number definitions. I am telling you what, see, these are early days. We have done hardly section 90, 90 and 91. That much only we have done. When we do more chapters, say we finish volume 1 and we are in volume 2, a good number of chapters are over. A good number of sections are studied. You will also start talking like that only. Page number 156, you will say, sir, page number demand notice. Page number 148, you will say, sir, page number reassessment notice. You will start talking in that language. You may find it funny today, but you just wait and watch. Today we will go to question number 1, page number 2. Please read the question. He is asking whether he is eligible for double taxation relief. For that, you have to check, first of all, has the double taxation taken place? Income from profession in India will be taxable only in India. But can I say, he being a resident has got incomes from foreign countries X and Y? And in both countries, he has paid tax. See, country Y ka tax they have given in percentage. Country X ka tax they have given in rupees. 8,000 tax paid on 40,000. You are CA final student, no? If asked to convert in percentage, will you be able to do it? 8,000 tax on 40,000 income. What is the percentage over there? 20%. That means, can I say rate of tax in country X is 20 and rate of tax in country Y is 2%. You all are comfortable with that? And these incomes are also taxable in India. Why are these incomes taxable in India? Resident, thus global income. So first question, has double taxation taken place? Yes. Then give relief. Go read the treaty and give him the relief. No treaty. And when there is no treaty, there is only one option, only one way of providing relief. What is that only way of providing relief? Unilateral relief. For that, you need to check only one thing. Because, listen, income outside India, tax outside India, and no DTAA. We have already checked. By the time you come to solve the sum, you have to check only one thing. Now you are getting an idea about what we have studied in theory is also what institute is asking in questions. Is he eligible? Is he a resident? That's precisely the reason why his global income is getting taxed. Yes, he is eligible. And thus, what is the calculation? Calculate the average rate in India, compare with foreign rate. If you have got two foreign countries, you don't need to be scared or afraid. You can compare it Indian or country X, whichever is lower, Indian and country Y, whichever is lower. That can be done country wise. Okay. And we will calculate our relief. Now that we have understood the concept of unilateral relief, Indian or foreign, whichever is lower, Indian or foreign, whichever is lower, we will now focus on being able to solve our sum correctly. Let's see. What is our first step that we have to do in order to calculate unilateral relief? Step number 1 is always going to be your NTTI in India. The only difference between the examples that we did and this sum is that they have given multiple income. So we did only one Indian, one foreign. Here they have given multiple income. So you cannot be afraid with that. You will have to write them one by one. What are the incomes given to us? Income from profession. In a question of DTAA, you should always mention the country so that you know whether this income is going to be covered in your relief or no. Indian income. 494, no? Next, income from country X where you have paid tax of 20%, 40,000. Income from country Y where you have paid tax of 2%, 30,000, and FD interest 1,18,000. 1 second please. Just a small piece of information. My dear copycats, every question in the question answer book of volume 1, volume 2, first 32 chapters, every question is a solved question. All solutions are printed below the question itself. And as human tendency, your first tendency is, yeah, let's not read the question, let's read the answer first. Any student found reading the answer in class, I am definitely taking your address and coming to meet you today itself. Today itself. Okay. And listen, you will have to pay for the conveyance also. Petrol you will have to pay. And for students from outside Mumbai, a very dangerous position you are. You will have to bear the air ticket. So in order to avoid being beaten at your own cost, please do not read the answers in class. Why are the answers printed? So that you have the proper presentation. That's one reason. Second reason, in class, we have not gathered to bring solutions to our questions. Solutions are already printed. In class, when we do questions, our objective is to develop the thought process. The sequence of solving the question step by step in our mind should be very clear. Then writing it on a piece of paper is a very easy thing. If you are blindly spending all your efforts in only writing what I am writing, then you are the stupidest person on the planet, because everything that I am writing is already printed in the book given to you. What should be your focus at this stage? If I am asking you that do you understand all these incomes will be a part of his total income? If I am asking you, thus what is the total? You need to do all that, because I have observed this, that in using the calculator also you can go wrong sometimes. So it is better that you do these things. It is better that you interact with me in class, participate in class, because the writing part, the printing part is already that effort I have put, so that you don't have to put the effort. You can talk to me when we are doing the sum. So please tell me, what is the total income? 6,82,000. And I will very peacefully call it the NTTI, because the question has not given us any information about any deduction. Correct or no? Yes. Then once we are done with this, this is what I am telling you. Your mind should be clear. When our Home Minister Motabhai said, understand the chronology, he was referring to CA students. He said, your chronology in your mind should be very, very clear. What should be your next step? Immediately after you calculate NTTI. Don't forget, you have to calculate relief. So what will be your next step? If we don't have any relief, what is the tax? The tax liability without relief. What is that? What is that tax liability without relief? Okay. What is the tax liability without relief? Now listen, sir, if the question is, sir, we should do old or new, sir, old or new, sir, listen, you have to do both in every question. Please pay attention, both. Like you remember, we did our example 2 when learning the chapter. We did both. But in questions where there is absolutely no information about any of the 20 tax benefits, there is no chapter 6A here. There is no house rent allowance, or there is no SEZ deduction or scientific research or 35AD or any additional depreciation. When the question has not given us any information about any such benefit, that means, can I say the NTTI as per old regime and new regime is same? And if the NTTI as per old regime and new regime is same, then it is appropriate to do it only as per 115 BSc. That is going to be beneficial. See, later on when you revise the chapter, you will get a doubt, sir. Sir, why you have not done both? Why have you only done new? I am saying you have to do both. But when none of those tax benefits are taken, then you will obviously do only the new regime. Okay. So calculate tax on 682 as per the new regime. Calculate the correct tax. Sorry, I will not say calculate the tax, calculate the correct tax. Very good. 31,928. Again, the same two people who gave 397 are giving 331,928, and everybody else is only enjoying the show. If later on this answer turns out to be wrong, I will never get angry with these two students who participated, because they are doing their duty. You can go wrong. It's a classroom. You have the right to go wrong. The anger will come on those students who are not doing anything, because everyone doing will verify whether it is right or wrong. In this case, I know it is the right answer. Everybody got 31,928 as per the new regime, and accordingly we will find out. Step number 3. What is our average rate of tax? 31,928 divided by 6,82,000 into 100. That is 2 decimals, 4.68%. You got it?
Yes, sir.
Now don't just say yes or no. You have to, at this stage, start developing the thought process. You have to think about it in your mind. What am I doing? Where have I reached? What should I now do? I have to complete the question to get my marks. What should I now do? What will be my next step? Because the more you answer these questions, sir, my next step will be this, now I should do this, now this is my final answer. The more you participate in all this, that means you are doing perfect study for your exam. Those who are only writing down what I am also writing are not doing anything in class. They are only doing time pass. Okay. So you tell me what will happen now. Just write down the foreign rate, because we will need it for comparison. And just because you have 2 foreign countries instead of 1, you don't have to be afraid. Ekka double Anuradha. Just because it is 2 countries, you can't be scared or afraid. You have to write both. What is the rate in country X and country Y respectively? and we have already written that. Correct or no? Next step, you tell me. Compare. Obviously, we will have to do the comparison country wise. As far as country X is concerned, can I say 4.68 or 20, whichever is lower, then our answer will be 4.68%. And in country Y, it will be 4.68 or 2, whichever is lower, that is 2%. Understanding is more important, ladies and gentlemen. Finally, in no time, we reach that place. Question, observe the required part. Mr. Rohit wants to know whether he is eligible. We told him that he is eligible for unilateral because he is resident. And what is the quantum? Ladies and gentlemen, your relief under section 91 will be calculated in respect of your incomes of country X and country Y respectively. At the already decided percentages, country X the lower rate is 4.68 and country Y the lower rate is 2%. But on what amounts, please? Country X, 40,000 has been taxed in both countries, and country Y, 30,000. Accordingly, 40,000 into 4.68, 1872, and 30,000. By the way, you should also know how to use the memory function of your calculator, because in not just tax, but in your a chapter like capital budgeting, if you don't know how to use memory function, you will consume double time to solve your sum. You know how to use it? 40,000 into 4.68, M plus, write that amount and do M plus. 30,000 into 2%, write that amount and M plus, and you press MRC, then you will get the total. 2472. What is the quantum of relief that Mr. Rohit will get? 2,472. 2472 is going to be the relief. Yes or no? Listen, question has only asked relief. You stop here. You will stop here. Only and only if asked, what will be your final tax? This question is not asking, but I am not here to do this question, yaar. I am here to make your mind clear about everything. Thought process. If asked, what will be your final tax liability? What minus what? 31,000 minus 2472. Tax before relief minus relief. Now whatever is the final answer that you and your calculator can enjoy with each other, this will be done only if asked. Have you understood this? To take you to the second example that we did in unilateral relief, just a second please. We got 84,000 relief in our normal and 120 in our special. If the question is only getting or asking us amount of relief, we will stop here. By chance, if this question also asked us our final tax, then tell me, as per normal, what minus what? 397,800 was the tax as per old regime. From this you will get relief of 84,000. Then what will be your answer? 397,800 minus 84,000. And as per 115 BAC, what was your tax liability without relief? 413,400, no? Minus 1,20,000. 293,400. Do you realize this amount, which was higher all throughout the question, ultimately ended up being lower of the two, because if the tax was higher, the relief was also higher, and thus finally this is the lower and this will be our tax liability. But what I am right now explaining to you is not this. What I am explaining is that you will be doing this step only if it is asked. So be very careful what the question is asking you, whether the question is asking you calculation of relief or the question is asking you final tax. If final tax is asked, this will be your answer. Our question of Mr. Rohit is only asking relief. We will stop at 2472. If it was an exam, in class we will discuss everything, but if it was an exam, we will have to bring that modification. Understood? Ladies and gentlemen, question number 2. Please read the question.
Mr. Kamlesh Kumar, a resident individual, is a musician deriving income of 750,000 from pursuits performed outside India. Tax of 1 lakh was deducted and sold in the country where the concert was held. India does not have any experience in the country for avoidance of double taxation. His Indian income is 30 lakhs. Compute the total income of the tax payable by him. Assuming he has deposited 1,50,000 in 50 years and paid medical insurance monthly premium in respect of his father, resident in India, aged 65 years, amounting to 52,000.
Now, if you observe the required part of the question carefully, please identify and tell me, answer my question. What is the required part? What does the question want from you? Means, what is ICAI saying? Hello, Mr. Student or Miss Student. You want marks? Say yes or no. You want marks? If you want marks, you do this, then we will give you marks. Identify that. That's the most important thing in every question. Do this and we will give you marks. What is that task given here? Computation of total income and tax. That will give you marks. So observe carefully. Here the question is asking you final tax. Unlike the previous question where you had to stop at relief. Here the calculation of relief is only going to be a small working note, a byproduct of this entire question. The main question is compute the total income and compute the tax liability. And when we have to compute the total income, one by one, we will take all the incomes that are given. I think even now, hardly anything is, only 2 incomes are given. No? Mr. Kalpesh Kumar has got Indian income of how much? 30 lakh. And he has got foreign income of. Even if it is foreign income, it will be taxable because of the principle of residence, world income. I think only 2 incomes are given, no? Correct? Fantastic. Then how is this question different from what we have been doing? At this stage, the total that I get here, I will call this total 37 lakh 50. Are the amounts correct? 37 lakh 50,000. And why am I calling it the gross income and not the net income? Because here this question has given us information about the contributions made by the assessee in order to be eligible for Chapter 6A deduction. A small piece of bad news for some extra smart, over intelligent students of the class. You are doing a chapter called DTAA, which is a part of international tax. In fact, 100 marks and 30 marks, both subjects. Correct, no? Some are like, sir, once you finish volume 1 and volume 2, thereafter when you do intermediate portion, clubbing, set of deductions, they are an insult to my talent and caliber, and thus attending those chapters is a waste of my time and my sleep. Open challenge. Open challenge. Solve this question of DTAA without knowledge of Chapter 6A if you can. Not possible. Welcome to direct tax. Direct tax means everything or nothing. Direct tax means everything or nothing. Once there is a question which says total income, that means it will require you to have knowledge of heads of income, clubbing, set off, deductions. Without deductions, you cannot solve it. And no matter how talented you are, there is always a possibility of not being able to recollect things that you have studied in CA intermediate. Some of them might have changed also over the last 3 years. So when the class and the faculty is taking additional effort for you to cover chapters which nobody else in the country is actually doing. PGBP capital gains also some people started doing after I started because they wanted to be in competition. Otherwise, topics like clubbing, set off deduction, house property, nobody is doing. I am going to be covering even those chapters with you in the regular batch. Please make most of this. We can save 15 days if we want by not doing those topics, but you cannot do DTAA without chapter 6A knowledge. Is this convincing enough to make you attend those lectures? And I think some of you all have already done this. I swear by my CA degree, I will not stop attending. Even after that, if you want to stop attending, that's again a matter of choice. We have been given information. At this stage, I am not in a position that I can teach you. If I have to teach you how much exact deduction is available in 80C or 80D, I'll probably have to take 1.5 hours from deductions chapter and then continue this question. It cannot work that way. And therefore, I am just telling you that when we make contribution to PPF, such contributions are eligible for deduction in a section 80C. The total deduction limit of 80C is 1,50,000 total. PPF is just one of them. Your life insurance premium, your recognized provident fund, your tuition fees of your school of your children, all that is covered out here. PPF is just one of them. The total deduction is restricted to 150. And in this question, how much contribution has been made by Mr. Kalpesh Kumar? 150, which is also within the limit. Had it been multiple contributions, say this was 2 lakh rupees, and we would have restricted it to 150. So you cannot answer this question without knowing the maximum limit. It's a mere coincidence that our 1,50,000 is also within the limit. So we will make him eligible for the entire deduction. That is our 80C deduction. And the question has given us about information about one more thing, payment of medical insurance of father. That means he has not paid medical insurance premium of himself. He has paid medical insurance premium of his father. Whenever we make payment of medical insurance premium, the deduction is in section 80D. What is the section for medical insurance? 80D. But please pay attention. When I will teach you 80D, at that time I will teach you. Today I am not teaching, I am telling you. Medical insurance contributions can be made for yourself also. It can be made for your spouse. It can be made for your dependent children. And it can be made for your parents also. Under life insurance, self, spouse, children is written. Parents are not covered. So if you make contribution of life insurance of parents, no deduction. But if you make contribution of medical insurance, you are eligible. And these are small, minute aspects of chapter 6A deduction, which you need to know so that you score maximum marks in your exam. We'll be doing all of this when we do our chapter number 40, chapter 6A deductions. Everything we will be covering, including these minute details. So first question, is payment for parent eligible for deduction of 80D medical insurance? Yes. If it was life insurance, then not covered, but medical insurance allowed. Next, how much have we actually paid? 52,000. So some people like this 150, they end up taking 52 also and take the deduction. Khatam, tata, finish, bye bye. There is a maximum limit in 80D also. And that maximum limit is 25,000 rupees. Please don't interrupt, pay attention. What did I say maximum limit is? 25. Some students who don't remember that limit will give 52. Gone. Those who remember the limit, over smart people, they will write 52 restricted to 25, gone. Because 80D also says one more thing, that if the person for whom you are contributing, the patient, is a resident of 60 years or more, resident senior citizen, then the maximum limit of 25 will change to 50,000. And in this case, who is the patient? Not Kalpesh Kumar. Patient is father. Is the father resident 60 years? Then the maximum limit will increase from 25 to 50. And our 52,000 contribution will be restricted to 50,000. If I have to convert this question into MCQ, listen how I make MCQs. How our MCQ book is the best book ever possible or available in the entire market. Listen, if I had to sell you that book now, then I was required to do marketing. I don't have to sell you that book. That book is already received now. Live batch students, that book is a part of your, I give it out of courtesy, though I require in class only the theory and question answer book, but out of courtesy I give the MCQ book also. So then whatever I am saying now cannot be considered as marketing because book is already given. Hello. I am telling you that this is the best book. It will secure your 25 marks minimum if you do only these questions, because every ICAI case study, every single question from ICAI database we have covered. And even those students who have taken class somewhere else, MCQs they study from my book. If I make this into an MCQ and I tell you to calculate the 80 deduction, you know what will be my answer? My answer will not be 50,000 will be one of them, of course. And I have to give you 3 more wrong options. If with 50,000 I give you 2 crore, 5 crore and 10 crore, then I am the biggest idiot on the planet. Obviously, it cannot be 2 crore, 5 crore, 10 crore. You know what will be my options? 50,000 is one of the options that has to be there in the options. It is the correct answer. The other 3 options, one will be 0. Those students who think that parents are not covered will choose 0 because they don't know the law. One will be 25. Those students who think that maximum limit of 80D is 25, who don't know about the higher limit available for senior citizen, they will choose 25. And the third will be 52, which is also our actual contribution. 0, 25, 50 and 52 will be my options. My options will be so close to the right answer. Many a time students are not able to distinguish also. So this is right or this is right. It is like the difference between paneer tikka masala and paneer butter masala. At this age also we don't know what is the difference between any paneer ka gravy. The options will be so close. While making the MCQ book, I have solved every question 4 times. 1, the correct answer, the first solution, and then I solved every question 3 more times to make some mistake. I solve that sum, I make a mistake. Supposingly I am a student. This step will be done wrong by a student. With this wrong step, what is the final answer? That will be my second option. Then do one more wrong step. What is the answer? That is my third option. One more wrong step. What is the answer? That is my fourth option. I give the options by making mistakes in the solutions. And exactly those mistakes which a student will have tendency to make. And the answers will be so close while solving. If you make that mistake, then you will get the other answer, which is also there in your option. Then below the questions, there is a table of answers. Sir, my answer is not matching, sir. How to get this answer? When I started making the MCQ book first time, lot of students had this query. Sir, I am not getting the answer only, sir. Sir, your answer is wrong. I said, my answer is not wrong. You have done a wrong step. Show me your solution. And that is where I got the idea of solving all the MCQ sums and uploading the lectures. You all have seen the channel, my channel. MCQ season 1 was for May and November 20. Season 2 was May and November 21. We plan to have season 3 very soon. I am just a little occupied with some other things. First, I have to complete my new handwritten book for this year. Then I have to work on CA intermediate book because last 3 years, 4 years, I am not teaching CA inter. Excessive workload because of international tax. Now I am settled with international tax. That was a new subject, so I had to put more effort. Now I am comfortably settled with that subject. So I am resuming CA intermediate coaching from May 22. Last 4 years I have not been teaching. So I am working on that book also. In all this busy schedule, whenever I will have time, which I can foresee that I am going to have time, because considering the circumstances in Kerala, nowhere can I see the possibility of conducting that batch from 13 to 27 of September. The scheduled batch is 100% going to get cancelled only. So with this, if I finish my work fast, you can expect that new season anytime soon. In the meantime, of course, you have this task. What task? Every time we finish the chapter, make sure that you immediately do the MCQs of that chapter. That's the best way to revise. If you ask me the strategy, this is the strategy. At this stage, what you need to understand is only this much. Because the father is a resident senior citizen, then the maximum limit of 80D will not be 25, it will be 50, and accordingly we will get 50,000 rupees deduction, and thus our total deductions will be 2 lakh rupees. You still remember what we are doing? Question number 2, Kalpesh Kumar. We did Indian income, foreign income total. We have given deductions, and can I say we have derived our NTTI of 35,50,000. Question has asked us to do that, calculate the total income and tax liability. On this 35,50,000, can I say we will have to calculate tax? But I'll tell you what. When we calculate tax, actually our calculation of tax is going to be on 35,50,000 obviously. But we have to also calculate. Now recollect the second example that we did. We have to also calculate on what income? Tell me the income, please. Don't disappoint me this time. Why 3750? Because the only change that has happened is he has taken the deduction which will not be allowed. So this as per old and this as per new. Please don't make the mistake now. Nine lakh 12,600. How did you get this? 25,50,000 into 30% plus 1,12,500. Some are like, sir, why 1,12,500? He can be senior citizen also. His age is not given. Listen, father is 65 years. You think father is 65, then Kalpesh Kumar can be more than 60? Some are like, sir, stepfather. Bhai. You can think anything that way. Anything is possible that way. If you want to think that it can be stepfather and Kalpesh can also be 60, that way you can do anything. No limit. But common sense says that Kalpesh has to be less than 60 years, and accordingly 1,12,500 plus 4%, 9,12,600. Everybody got it? And as far as new regime is concerned, can I say 2250 into 30% plus 187,500 plus 4%? How much do you get in the new regime? 897. Now what's our next step? Average rate of tax. Now tell me, as per normal, 9,12,600 on what? 3550. 25.71 and 115 BAC. 897 on 3750. Are you sure? I don't think so. 897 divided by, and which is why participation of students in class is required, because one person gives wrong answer also, then also others can correct it. That understand what I am actually trying to make you learn. I do understand. First chapter we are doing sums. In due course you will get the comfort level. Okay. Once we have the average rate, can I say we will now compare it with our foreign rate? 1 lakh tax paid on 7,50,000. 2 decimals, 13.33%. And therefore, if we have to choose the lower rate under normal or under 115 BAC, I think both cases it is 13.33 only. Correct, no? 25.71 or 13.33, whichever is lower, 13.33, and 23.92 or 13.33, whichever is lower, 13.33. Don't make blank faces, you all are following, no? What will be your relief under section 91? Whether as per normal provisions or as per 115 BAC, the relief will be at 13.33 only. On what income? In normal or special? Both 750 you are saying? You've taken deductions, no bro? Listen, just answer what I am asking. The deductions that we have taken here, is it mandatory that you have to take it against a particular income only, or you can take against anything? And when you can take against anything, then what is going to be your first preference? And let our entire foreign income be eligible. Had it been a deduction which can be taken only against foreign income, then we don't have choice. But when we have the choice, we will do it this way. And I am not saying this institute suggested answer says this. This question is from ICAI study material. I am continuously giving you false information, lying in front of you that I am covering all questions of ICAI study material. How will it be proved? You go and check the ICAI study material, no? Then only it will be proved, no? That whether I speak the truth in class or I give you false information. You can have trust issues, no? We are only in our 4th lecture. You can have trust issues. Go check. This is institute question, and as per institute suggested answer, they have taken full 7,50,000 on the assumption that the deductions are taken against Indian income. Accordingly, can I say whether normal or special, both provisions, 1 lakh is your relief? And thus, if we are asked final tax liability, as per normal, we were getting 9,12,600. Take relief of 1 lakh, you will get 8,12,600. And as per 115 BAC, you were getting 897. So this will become obviously 797. The relief amount is same only, no? Now decide which regime to choose. Today decide. Today. Thank you. And after looking at these two, what is more beneficial? Obviously, we will choose this option. Understood? So now you are getting an idea, a practice about how unilateral relief works. And have I already told you that 99 out of 100 questions in CA final exam, where DTAA comes almost every attempt, either paper 7 or paper 6. Paper 7 also it comes also almost every attempt. 99% chance it will come on unilateral relief only. A question like this can fetch you anywhere about 6 marks or something. Good, no? This is your target area, boss. This is your target area. Okay, chalo, let's go ahead. Next question. Question number 3, please.
An individual resident in India having income earned outside India in a country with which no DTAA exists asks you to explain whether the credit of the tax paid over the income in that country will be allowed to him in India.
See, if the continue, is the question over? With which India does not have a DTAA. Whether the credit will be allowed? If the assessee is saying that please give me relief as per tax credit method, that is not possible because there is no treaty. If there was a treaty, there could have been a tax credit method. But even if tax credit method is not available, is it still possible to give some relief to the assessee? What is that possibility, please? No, rubbish, sorry. When there is no treaty, there can neither be tax credit nor tax exemption. Unilateral. And why do you say unilateral will be available? No DTAA is okay, but more important, the only thing that you have to check, if the assessee is resident and there is no DTAA, unilateral is still possible. This is a question again on unilateral only in theory. Okay. And if given for more number of marks, you can give a small example. Like we did know one example of unilateral relief. You can take the smaller one and show it that you can get unilateral relief if you are a resident. Question number 4, please.
The Income Tax Act 1961 provides for taxation of a certain income earned by residents. However, the DTAA, which applies to exclude such income from the purview of tax, is Mr. X liable to pay tax on the income earned by X in this case?
I will not even give you half mark for giving the correct answer. Not even half mark. Act says taxable. Treaty says not taxable, exempt income, because you have already paid tax in the other country. Then will you pay tax? Taxable according to the act not taxable according to the treaty, will you pay tax? Obviously no, bloody hell. That was the reason why the treaty was entered into between the two countries. Correct or no? Had it been the other way around, then it will still be a good question. Other way around. As per the treaty, this income is taxable in our country. But in the domestic tax law, it is exempt. Taxable as per treaty, exempt as per act. Then what will be your answer? Whichever is beneficial. I wanted to hear this from you. Whichever is beneficial. Correct or no? So whether treaty exempts or act exempts, you don't have to pay tax in both cases. No problem. Those who have got heart problems, cardiac problems, blood pressure related issues can take a short break of 5 minutes, and normal students can continue with me. Question number 5, please.
Question number 5. Arif Arif, a resident in India and Malaysia, in previous year 2021 and 2022 owns immovable property, including residential house at India and Malaysia. He has earned income of 50 lakhs from a rubber estate in Malaysia during the financial year 2021 and 22. He has sold the property in Malaysia, resulting in a short-term capital gain of 10 lakhs during the year. Arif has no permanent establishment of business in India. However, he has derived rental income of 6 lakhs from property rent out in India, and he has a house in Lucknow where he stays during his visit to India. The Article 4 of the double taxation order between India and Malaysia provides that where an individual is a resident of both the contracting states, then he shall be deemed to be the resident of that contracting state in which he has permanent home available to him. If he has permanent home in both the contracting states, he shall be deemed to be a resident of that contracting state in which his personal and economic solutions as closure, center of vital interest. You are required to state with reasons whether the business income of Arif arising in Malaysia and the capital gain in respect of sale of the property situated in Malaysia be taxed in India.
Some are like, sir, please continue that only. No, Indian income, foreign income, whichever is lower, we are comfortable with that, sir. Let's continue that only. Dekho, ek to you have taken a professional course, and that also that course called Chartered Accountancy. That means you have not come here for comfort. Don't expect comfort. I will try to make you comfortable with things whenever and wherever possible, but ultimately be prepared for tough things in life. So I'll do one thing. I am not asking for any answer. We are discussing the question. This question, answer this simple thing. From what part of this chapter is this question? Which part of the chapter? It's a big chapter. We finished the chapter. Which part of the chapter is this question from? Bilateral. Till now everything was from unilateral. But this is from, why bilateral? Because there is a treaty. And I will now divide the question in 3 parts. Listen. First paragraph of the question is facts about Arif. Details about Arif. They have given details. You were quickly reading. I was writing. Let's verify whether the data is correct or no. Arif is resident in both India and Malaysia. Have I written that correctly? He has got home in both countries. Have I written that correctly? And then they have given details about the income. PGBP income from rubber plantation 50 lakhs. Capital gains of 10 lakh. 60 lakhs income in Malaysia. And 6 lakh rental income in India. Have I written the income figures correctly? These are details. These are facts. This is data about Arif. Facts can change from assessee to assessee. Do you agree with that? It was Arif. These are the details. If it was maybe someone else, if it was Raghav or it was Nafis or Sainath, the details would have been something else. Fact can change from assessee to assessee. After this, the question has given you the law. From that line, the Article 4 of the DTAA between India and Malaysia. Can you see that line? From there, the law. Do you know the law remains same for everyone? The income that you earn can change from person to person. We have to decide for Arif. But the treaty provision The law where you will pay tax, where you will not pay tax, that is same for everyone, whether you are Arif, Raghav or Nafis, anyone. Do you understand? And then finally they have asked us the question. The question is confined in the last line, whether the income of 50 lakh from rubber plantations and the capital gain of 10 lakh, short-term capital gain, whether it will be taxable in India. That is, ladies and gentlemen, the question. First they gave us the story, then they gave us the details, the law, because I told you every time they have to ask you a question on bilateral relief, they have to give you the treaty, and then they ask you this question. Are you understanding the structure of the question? Facts, law, and then the question. Question is in one line. You have to decide whether these incomes are taxable in India. Okay. Before reading the treaty, let's understand what is the data given by Arif. Arif is a resident in both countries. That is given in the question. He has got some income in India and he has got some income in Malaysia. Answer what I am asking you. If you want comfort level, please answer. This 6 lakh. Source is in India, but residence is at both places, and thus 6 lakh will be taxable in both countries. Malaysia will also take tax because of residence. Very good. Same applies to this 60 lakh. Source is in Malaysia, but residence is in both countries. So India will take tax because of residence, and Malaysia has got residence and source both. The concept called double taxation due to double residence. And I'll tell you what, my common sense of taxation, with whatever little bit knowledge of taxation I have gained over so many years, I may not be as intelligent as you people, but what my common sense says is, taking tax on the principle of source is justified because you've earned in that land, it is your duty to repay that land. But taking tax on the principle of residence is unfair. You basically want something from someone else's plate. Principle of residence is making tax on this income or tax on this income. And this is one of the most important concepts of international tax, both paper 7 and paper 6, the concept called tiebreaker. Whenever an assessee is resident at both places, do you agree with this line? Tell me in yes or no. Whenever an assessee is resident at both places, everything will be taxable everywhere. You agree or you don't agree, will decide whether I will go ahead or no. If you are resident at both places, everything will be taxable everywhere. We have already seen taxable at both places, and this is also taxable at both places. And thus we have to incorporate a tiebreaker. Tiebreaker means whenever there is a tie. You've seen super over? Something like that. A tiebreaker. We will cancel one of the two residences. We will keep one of them and cancel the other. The moment we cancel one of the two residences, the assessee will remain a resident only at one place, and the things will become a little clear, and that will depend on the treaty, and it is always given in Article 4. Article 4 of every treaty in the world is about residential status, and thus they have given us Article 4 for India, Malaysia. So once we are clear about facts of Arif, can we go and read what is the treaty saying? Because on the basis of our reading, we will cancel one of this. He is resident in India and Malaysia. We will cancel one of this, and then the picture will become a little clear. This stage, we have to go and read the Article 4 of the treaty given. Ready with me? Let's see what is given. The Article 4 of the agreement between India and Malaysia says, whenever an assessee is resident in both countries, is the assessee resident in both countries? So thus is Article 4 applicable to Arif? Then we have to incorporate tiebreaker. What will you need to check? I will not say. The Article 4 will say. What do you need to check to do tiebreaker? If he is resident at both places, what will you check? Read the article. Tell me what will you check. Where he is having a permanent home, he will be a resident over there. That's a tiebreaker incorporated by India and Malaysia. Based on that, we have to go and check. Where does he have permanent home? That residential status will remain, other will cancel. But this has not solved our problem. This has increased our problem. Why? Because when we go and check permanent home, we identify that he has got permanent home. Where? India or Malaysia? And thus we are not in a position to decide with this. Don't worry. The article will not leave you till the end. If you have permanent home in both places, what will happen? The article will only tell you. And it has told you. Go read. If he has permanent home in both contracting states, then what do you need to check? Where does he have personal and economic relations closer? That is known as center of vital interest. Where do you have personal and economic relations closer? Are you following? Listen. Personal relation, never in life you will be able to identify where are personal relations closer. Means he has got how many wives in which country. Don't be surprised he is Arif, he is legally allowed to have 4, if you understand what I am saying. But maybe if it was someone who is legally allowed to have only 1, then how will you decide? If he has 2 wives, whom are you closer to, first wife or second wife? You will never decide. Well, let me talk about someone else who is legally allowed to have only 1 wife. Supposingly your wife is in India and your children are studying in Malaysia. Whom are you closer to, wife or children? Some are like, sir, don't ask things about which we have no experience. And with my experience, I can tell you it is very difficult to choose. Now we have had a pact. We have a pact at home. Pact, you understand? An agreement. Till 5 years age, priority will be child. Once he is busy in our life, then priority will be you. You means madam. I'm talking about her. That's a pact that we have signed. Otherwise, you can never decide. So, as far as personal relations are concerned, it is never possible to decide whom are you closer to. Make sense? But if you go check the economic relations, the question is loud and clear. Where are the economic relations better? Malaysia. And thus, where will we treat him as a resident of? And where will we cancel? This is tiebreaker. And to get the tiebreaker right, you have to go and read the treaty and you have to go in the chronology of the treaty. Treaty said check whether he has double residence. We checked. So we apply tiebreaker. Check home, both places. So check center of vital interest and thus he is a resident of Malaysia. And now we are in a very easy position to answer this. Whether, the question is only asking about this, whether these incomes are taxable in India. Tell me one thing now. Tell me one thing. Where is the source? Malaysia. And now where is the residence? Earlier it was both. Now where is the residence?
Malaysia.
So in India there is no residence, no source with respect to these incomes. These incomes will not be taxable in India. That is your tiebreaker rule, one of the most important concepts of your international tax. Understood? Now listen. We still don't know about this income because residence is in India now. No, sorry, residence is in Malaysia. After tiebreaker, residence is Malaysia. Where is the source of rental income? India. So we don't know whether home country will take tax or host country. For that we have to read the treaty. But they have not given us any further information about the treaty. So listen, no, they are not even asking about this rental income. Has the question asked you anything about rent? Because they have not given information. They give you information only about this and they ask you only about this. In bilateral, any question will be only to the extent the treaty clause is given in the question. So they gave you details about these incomes. They asked you question only about these incomes. For the rental income, they have not asked only anything. Understood? That was your question of Arif. A very, very important concept of tiebreaker was taught out here. Question answer is just not about problem solving. Question answer also brings with it a lot of concepts many a times. Okay. At this stage, I am going to take you to our question number. Everybody understood now? Shall we go ahead? We will go to question number 6 now. Before I go to question number 6, and you start reading. Anshika, please 1 second, listen. This question number 6 is the Gita, Quran, Agam, Bible, Guru Granth Sahib, whichever religion you follow. Every religion has its own holy book. This question is the holy book of the religion called double taxation relief. Every chapter will have one such question. That one question, which if you do, it will make you revise your entire chapter. It will summarize for you your entire chapter. It will work as a revision of the entire chapter. One day before your exam, it is humanly not possible to solve 400 plus questions. One day before your exam, it is not possible to solve 400 questions. You understand this? But you need to solve at least some questions, at least from the important chapters, and I am going to identify such questions for you as and when we go ahead in our portion. In this chapter, it is question 6. If you do question 6 on your own comfortably and successfully, you can do anything in the chapter. If you can do question 6, you can do anything. That is the kind of question we have for you. And let's see what do we have. Please read. I will be telling you about such questions chapter after chapter. Your duty to then mark it that okay, this is something that I will use for my subsequent revisions every time I have to revise the chapter. Okay, so please read question number 6. By the way, question is over. Huh? Some are reading further. What else is given? Any question is over. Now the answer is given. And I have already told you, if you want to do justice to your talent and caliber. See, you are a CA final student. That means you are more talented than 99% of the country's population. Please don't do injustice with your talent by reading the answer first, because that will make you a biased student. You already know what is given in the answer. Then it will not make, it will finish the entire challenge altogether. So let the challenge come and be prepared to go wrong in class. Absolutely no problem. Okay. Okay. So tell me one thing. Answer what I am asking. If you want to get marks, what do you need to do? What is asked? What is required? Computation of total income and tax liability, for which details of income are given. On the details of income, we will calculate our tax liability. Correct? And obviously, with foreign income given to us, and he has paid tax in foreign countries, question has told us that he has paid 12% in country A and he has paid 23% in question B. That means it's a clear case of double taxation also. And we will provide him relief. After so much experience, you can understand this much also, that when there is no DTAA, then there is only one way in which we can give him relief. And for that, you need to check only one thing, that is, which he is, and therefore he will be eligible for unilateral relief. Being a resident, tell me yes or no. So what are we required to do? We are just required to compute total income, tax before relief, average rate, compare with foreign rate, whichever is lower. No problem. Fantastic. Let's see what do we have. Let's calculate entity. When the questions that we did so far were giving us simple two incomes, Indian foreign. Our examples were also Indian foreign. Our questions also, if you observe Rohit question or Kalpesh Kumar question, there were not many incomes given. But when there are so many incomes given, there is only one correct way of doing NTTI. Ultimately, NTTI is a total of your heads of income. So the best way of doing it is do it head by head. 5 heads of income, do it like this. Salary, check if it is there in the question. If it is there, you write it. If it is not there, you don't write only. Don't waste time. Likewise, check for house property. If it is there, write it. PGBP, if it is there, write it. Capital gain is there, write it. IFOS is there, write it. You are done with all the 5 heads. You have computed your total income. Go by head. Every time you give the heading NTTI, your objective is to search for one by one heads of income. So go search one by one heads of income and think about one thing at a time. If you start thinking about everything, what will I do with agriculture income? What will I do with royalty? If you think about everything at one time, you will get confused. So the correct way of doing it is think about it head by head. What is the first head of income? Is there any salary given to us? Then don't waste time. Next head of income. Is there any house property income given to us? Yes. Now, whenever you do a question on DTAA, make sure you always write the name of the country and the rate of tax. Make sure you do it so that you know later on you have to provide relief on this income. Are you following? So tell me, what is the rent that you have earned from country B? 3,30,000. Rental income earned from country B? 3,30,000. If you write this rental income in the outer column by calling it income from house property, then it will be a disastrous situation, because there is a basic principle of income tax. Whenever there is any expense incurred for the purpose of earning income, you will get deduction, and in this case, the assessee has incurred municipal taxes in the country in which he has got income. That municipal taxes amount to rupees 10,000. Only after taking this deduction, you can pay tax on, or you will pay tax on house property, and accordingly, the amount that we will write in the outer column will be rupees 3 lakh and oh, but ladies and gentlemen, bad news. Bad news. This will be called gross annual value, and this 320 will still remain in the inner column. We will call it net annual value, because the calculation of income from house property requires that whatever is your net annual value, from that you will be getting a standard deduction of 30%, and only after taking the standard deduction you will be paying tax on your income from house property. Name of the chapter? DTAA. Testing whether you know house property. You need more reasons to attend volume 3. Sometimes I feel I am a complete fool here. Again and again I request students, don't stop attending, don't stop attending. Why don't I develop this attitude? Bhaad mein ja, to hell with you. I am going to cover the chapters. Whoever wants to come, come. Whoever does not want to come, to hell with you. I have my CA degree. I have my membership number. My lectures, my pen drives, my video lectures, my books, they are getting sold more than anybody else in the country. I am very comfortable in my career. To hell with you. You want to get your result, you come, you don't come. But somehow I am not able, somehow I am not able to develop that attitude. I always feel that, yeah, why is this student not attending? You're losing marks. I always get that feeling. Okay. I think you now have enough reasons to understand that not attending volume 3 is not going to, you will not be able to solve a questions of DTAA. DTAA is important, no? You want marks over there, no? You can't do it without house property. And as and when we go further in the question, you will realize what more is coming. Okay. Next, house property is over. After house property, what is our next head of income? PGBP. Go check if the assessee has got any PGBP. Does he? Income from business in Mumbai. Every time you write an income in DTAA, it is advisable, not mandatory. It is advisable to also write the country. I hope you know Mumbai is in India. Okay, so Indian income of 9,20,000, no? I have written this 9,20,000 in the outer column. That's PGBP income. Wait, I already told you I am not here in this classroom to bring solutions to these questions. That is not why we gather here. That is not why we have come here. Thought process is important. Because when I write this 920 in the outer column, some intelligent student points out, sir, he also has got agriculture business in country A. Please write that income also. Some student is telling this to me. Please write that agriculture income. Even before I reply to that student, some other intelligent guy interrupts, says, sir, this guy is foolish. Agriculture income is exempt, is what we have all studied all our life. And this person is saying, write agriculture income over here. No. This second guy is actually the foolish guy. The first student was the correct student who said pay tax on agriculture income. There is a section 10(1) in income tax. Don't write anything. I will make you write this. By way of a proper note, I will make you write this. Please understand the explanation first. Please understand the complete explanation, and then writing part I will do. I'll make you write a note here. Please listen to me. This is the section which exempts agriculture income in India. That you don't have to pay tax on agriculture income is this section 10(1). You know what is written in this section. Please listen. I am reading section 10(1) from you. From here, copy paste. Rent or revenue from land in India, from land in India used for agricultural purposes. Exempt. That means agriculture income is exempt only if it is arising in India, and that means agriculture income arising in a country outside India is going to be taxable. First of all, be clear about that. So the second student is wrong. Everybody is clear about that. The first student who said agriculture income is taxable, should be taxable, should be coming in our computation is to that extent correct. That means if I ask you, will agriculture income come in our computation? Then what is your answer? In the total computation? Yes. Easy, because it is outside India. Now, let's go into some more discussion. I'll make you write everything, don't worry. Agriculture in India is exempt. It is taxable only if it is outside India. Do you have the brain to understand that agriculture income outside India can be taxable only for resident assessees? Only for resident assessees. Just tell me if you agree or you don't agree. If you don't understand, I will explain the reason behind it also. Why will a non-resident not pay tax? Why will it be taxable only for resident? Because don't forget, globally there are two principles of levy of tax: residence and source. Source in India not required to pay any tax, exempt income. Source outside India is taxable. But if the source is outside India, then India can apply tax only on the principle of residence. And thus, I am asking you only this simple thing. Non-resident foreign income cannot be taxable in India. You understand this? Supposingly Donald Trump is a retired US president now. He starts agriculture in America. Well, I have retired now, I will do farming. Is that agriculture income outside India? It is agriculture income outside India. So does that mean it will be taxable in India? You think Trump will pay tax on that income in India? Obviously not. because no residence, no source. That means foreign agriculture income is taxable, but can I say only if the assessee is resident? Make you write the full nota, you just pay attention. Then very quickly answer. Agriculture income in India? Exempt. Agriculture income outside India? Taxable, but only for resident. Last piece of information. If the assessee is resident, then where will he be spending majority of his time? If you are a resident assessee, obviously in India. And thus Income Tax Act has put an assumption here. There is an assumption here. Now you can contradict this assumption, but there is an assumption. They are saying that because you have spent maximum time in India, then the income of agriculture outside India cannot be your main source of business income. We will take tax from you, but under income from other sources. It won't come. Of course, this assumption can be wrong, because I can have foreign businesses by recruiting staff over there. I stay in India, but my staff is working. It is possible, no? But they are assuming that it is going to be income from other sources. That means if the question is, will the agriculture income come in the computation?
Yes.
Yes. But will it come here under PGBP? No. It will come where? It will come under IFOS. And same thing is applicable for the royalty income also. Royalty income has also been specifically covered under IFOS. So, agriculture income and royalty income both will come, but both of them will come under IFOS, and thus I have written full 920 in the outer column to answer the question of that student. Sir, agriculture income is taxable, and why you have not written it? Because it will come, but under IFOS. Followed? Now I will make you write a note on this before I take you further. I will make you write only on agriculture income, because royalty income, anyways, one day we will be doing income from other sources. No, it will get covered over there in complete detail. Royalty deduction part also we will be learning. It will be taken care of somewhere else. So for royalty, no need to write any note, but for agriculture, I will make you write a note. Okay. Where will we write this note, please? Please understand. The explanation that I gave you, that Indian agriculture is exempt, foreign agriculture is taxable only for resident. You think that was an explanation only for this sum? It was only related to this sum? It is general knowledge about income tax. And whenever we will come across such provisions, we will make a separate page in our notebook. Please listen. A separate special page in our notebook. The general points to be noted about income tax. This page can be either the first 2-3 pages of your notebook, which you have already used, so that is no longer an option, or the last 2-3 pages of your notebook. We will give a heading, general knowledge about income tax, or general points in income tax, points to be noted in income tax. General points. And today we are writing one note over there for the first time. As and when we do chapters, whenever we come across any such point, we will keep on summarizing it. So we are preparing our handwritten book in a very, very comfortable manner for future revision purposes. When you are making this in the last 2-3 pages of your notebook, please make sure that you preserve it till your exam, because most students use their last few pages of notebook whenever they are using a nail cutter. They tear a page from the last end of the notebook, use that and throw that. Please make sure that, I know we all do that. Please make sure that if you do it on the last few pages, preserve that notebook till your exam. Okay. Otherwise, leave the last 4 pages and start from the 5th page. Reverse 5th page. Okay. Wherever you write it, now I leave the choice to you. Write it on the table, write it on the wall, wherever you want to write it. Make sure you have this till your exam. That is more important. First time we are doing any such general point to be noted, because this is still early days in our batch. A lot of things will happen for the first time. In the coming days, you will become comfortable. So, what are we writing? Write down, please. Agriculture income exempt only if in India. Short mein I will make you write. Agriculture income exempt only if in India. Outside India taxable only for resident. outside India taxable only for resident under IFOS. Under IFOS, agriculture income exempt only if in India, outside India taxable only for resident under IFOS. So whatever we have discussed, we have written that also. For royalty, no need to write anything because anyways we will be covering it under IFOS in detail. Understood? Mitro, name of the chapter? It has already tested knowledge of house property, knowledge of exempt income chapter, knowledge of not deduction. Which deduction? Deductions will come later. Knowledge of IFOS chapter. Section number of agriculture was 10.1. Agriculture income exempt only if in India under 10.1, outside India taxable only for resident under IFOS. Okay. Chalo. By the way, we have not studied even one single word of knowledge acquired in DTAA chapter till now. We are doing heads of income. Very good. Next, is there any capital gain of the assessor? No. You only have IFOS. First of all, here IFOS there are multiple incomes. Two we have already discussed also. But when you do IFOS in any question, not just this question, any question, what you should do is go at the top of the question. Read every income, even if you have considered it. For example, house property is also already considered, or for example, income from business in India is already considered. But still do that. Sir, why we should do that? Sir, because one, any income which is not covered till now, it will come under IFOS. Second, if while solving our question till here, by chance, if we have missed any income, maybe there was some salary income but we have missed it, maybe there was some capital gain but we have missed it, so this will serve as a check. Internal control system work of one person is checked by another. Like this, you have memorized things, no, in audit, something like that. It will serve as an internal check. So check from top and read all the incomes, even if we have already discussed. For example, first income, income from business in India, already done. No need to do anything. Take me further from there. Next income. Interest on saving account. Part of IFOS. Rupees 64,000. Next. Continue. Read all the incomes. Acha, by the way, for all the incomes, you should mention the country also so that you know whether to give relief or not. Next, please. Sorry. Continue. Agriculture. I think we have had full discussion on this. Country A, rate of tax 12%. What is the agriculture income earned by the assessee? 72,000. We have already written a note also. Continue. Read all the incomes even if done. Royalty income. The royalty that we have earned is rupees. However, as a basic principle of income tax, every time we earn any income and there is any expense incurred, expenditure incurred for the purpose of earning income is always going to be allowed as a deduction, and thus we will be paying tax only on the net income of 730. We have expense of 70,000, no? So take deduction of that expense and pay tax on 730. Continue, please. Dividend income. Where do you have it? Achha, by the way, royalty also write the country. Country A, no? And we have dividend income from country B, 23%. That is rupees 2,25,000. Listen, now all dividend incomes are taxable because there is no DDT. Even when there was DDT, this income was taxable because DDT was only on domestic companies. So foreign dividend was always taxable anyways. Now it is very easy. You have to take it. Thus, finally, what is your IFOS total? 10 lakh 91, and this total where you have to take your house property of 224, PGBP of 920 and IFOS of 10 lakh 91. What is this total? 22 lakh 35,000. I will call it my gross total income. Listen please. Supposingly you don't have knowledge of chapter 6A. I have to give you the benefit of doubt. Unless and until I teach you, I will never assume that you know. But did I, in today's class only while teaching you something, discuss this with you that whenever an assessee has got royalty income up to a maximum of, the assessee will, this is 730, so this will be 3 lakh. If this was only say 30,000, then this would have been 30 only. We will get a deduction of 3 lakh rupees. Correct or no? Yes, sir. You should see that way you don't know ATQQB, but we discussed it today, so we'll take it. Now take deduction of 3 lakh. Accordingly, you will get your NTTI of 19 lakh 35,000. Yes or no? TTA. TTA, so can I say you will give deduction of 10,000 rupees? Nah, bad news. Sorry, bad news. Mr. Vikas, which Modi ji promised 7 years ago. We don't know whether that Vikas has come or no, but this Vikas came 60 years ago. Ladies and gentlemen, this Mr. Vikas is a senior citizen, and whenever the assessee is senior citizen, the deduction is not under 80 TTA, it's in 80 TTB. Section number changes, sir, only section change. What difference is? The maximum limit of 80 TTA is 10,000, but the maximum limit of 80 TTB, which is only if the assessee is a resident senior citizen, not available for non-residents. Non-resident will come in 80 TTA, but here Mr. Vikas is resident. The maximum limit will be 50,000. So listen. When I say that if you don't know chapter 6A, I will give you benefit of doubt because I have not taught you, that was applicable for a section like ATQQB. I cannot give you benefit of doubt for not knowing a section like TTA, TTB. You cannot say, sir, my inter was weak, I cleared due to IDT and I am working in audit. Tax is my very weak subject. Don't behave like a stupid person. You have a saving bank account. Even if you earn a ridiculous amount in the form of stipend, you still have something coming in that account. You have bank interest coming in that. And if you have bank interest as a CA student, you cannot not know that your bank interest is eligible for deduction just because I am working in audit. Nonsense. You need to know the deduction that you get on your own. Some are like, no sir, acha theek hai, no sir, you don't know, no problem. Now it gives you more reasons of attending volume 3. I'll tell you the differences orally. TTB is only if you are resident 60 years. So all other individual HUF, including non-resident individual, will come in TTA. That's the first difference. Maximum limit we have discussed. TTA maximum limit is 10. So if you don't observe the age of Mr. Vikas carefully, you will end up giving 10,000. But the correct is 50. And see, that is because this is 64. Huh? By the way, had this been 4, this will never be then 10 or 50. This will be actual interest or 10,000, whichever is lower, actual interest or 50,000, whichever is lower. Okay? These are things which everyone knows. But there is one hidden aspect which most people don't know. An institute has targeted that quite often. And that is 80 TTA, which is within maximum limit of 10,000, which is available to all individual HUF, even if you are not senior citizen, is available only against saving account interest. and 80 TTB, which is a higher deduction for senior citizen, resident senior citizen, 50,000 rupees, is available against saving and time. Time deposit means FDRD. Means we have come here in class not to solve these questions. Why have we come? To make you understand. This was saving account. If this was FD also, still our answer will remain same. This is available against FD and saving both. Cut! Come to question 1, Mr. Rohit. Please understand the objective of coming to class. Mr. Rohit. Interest of 1,18,000. Sir, why we have not given any deduction here? Because it was FD. If it was saving account, then we would have given 80 TTA against this 10,000 rupees. You need to know this. If the question changes, how your answer has to change, you need to know this. That is why we have come to class. Supposingly Rohit was 60 years. Then whether this is FD or saving, still you will get 50,000. Like Vikas is getting. You need to know that in depth. So why have we not given any deduction here? Because Rohit is not a senior citizen, covered in TTA, and TTA allows only saving account. So there was no deduction in question 1. Then why are we giving here? So this is saving. Not just that, even if it was FD, for senior citizen both are covered. And what is the maximum limit of TTB? 350. I think enough reasons now to attend volume 3 also. By the way, we have not used a single word from DTAA. We studied house property, exempt income, PGBP, IFOS, agriculture income, chapter 6 said deductions. You studied just about everything, but not DTAA. What is your total deduction finally? 350, giving you NTTI of how much? Finally, we have calculated our NTTI. Question over. Hash. Nash. Question is calculate total income and calculate tax liability. Hello. And now we have to do calculation of tax on 1885,000. That's not enough. Why? This is as per normal provisions. As per 115 BAC, now we have done enough number of examples and questions. Will our income change? Let's see. This time it's a big question. We know deductions are there, but let's see everything. First, house property. Have we taken any benefit out of 20 which is not allowed? There were two things of house property. I will remind you. I know you have not revised. I will remind you. One, interest deduction not allowed in SOP. This is SOP or LOP? This is let out property or earning rental income. So that restriction not applicable. And house property loss against other heads of income not allowed. There is no loss here. It's a profit. That means no benefit. Over here directly amount is given. So nothing. Over here if you observe, this directly we have written the income. Here we have only taken deduction of expense. In the list of 20 tax benefits, nowhere we have said that expense will not be allowed. We have said deductions will not be allowed. Tax benefits, exemptions, concessions will not be allowed. But expense will be allowed in new regime also. So till now nothing. In effect, the only thing that we have to disallow to compute our income for 115 BAC is what? 350. Accordingly, can I say our NTTI will be 20 to 35? Now let's calculate tax on both amounts in the respective regime. Hmm? 395.20. How? 885 into 30%. Correct?
Yes.
Plus 1,12,500. Nah, 1,10,000. Sir, why 1,10,000, sir? Mr. Vikas. If you were wrong here, if you did TTA here, then you will be wrong here also. Because you have not seen only that Mr. Vikas is already 60 years old. Ladies and gentlemen, 1,10,000. And of course, you will add 4% cess. 395.20. Here only tell me the average rate also, yaar. Now, I know you are used to this. Tell me the average rate, 2 decimals. 20.72%. And what about 115 BAC? What is your tax liability? 7,35,000 into 30%. 735, no. Plus senior citizen. So we will reduce 2,500, no? No? 187,500. 735 into 30 plus 187,500 plus 30%. Sudarshan ji, calculate. He's gone off to sleep. 4,24,320. 735 into 30% plus 187,500 plus 4%. Understood the importance and the reason behind doing tax rates in introduction itself, so that I don't have to teach you those things here. It is your duty to calculate now and remember these rates till the end of our portion. Tell me what is the average rate here. 18.98%. Correct? So we are done with tax, we are done with average rate, and now we will compare this with foreign rate. Again, foreign also 2 countries are given. No problem. Country A 12%, country B 23%. And after doing Indian rate and foreign rate, what do you have to do? Be careful here. Huh? If you are not careful, you can make a mistake here. Be careful. We have to choose lower regime wise. So we will have to choose lower as per normal, and we will have to choose lower as per 115 BAC. Correct? When we talk about normal, look at only 20.72. Ignore 18.98 for the time being. 20.72 is the Indian rate of tax, which will be compared with 12 and 23. That's country A and country B respectively. So tell me, 20.72 compare with 12%. What's your answer here? 12. Second step, tell me what will you compare with what?
23 with 20.7.
So what's your answer?
20.72.
Now if you are understanding what I am asking, then tell me both answers here also. First of all, now we are not checking this. Now we will check this. 18.98 compare with 12. What do you get? And 18.98 compare with 23. I think we have also identified the respective incomes on which we will get the respective rates at which we will get relief. Finally, the time has come to calculate our relief under section 91. We will have to do in normal and relief as per 115 BAC. Both regimes have to be done till the end. In that also, the rates we have already identified. Are you understanding what is happening? Tell me in yes or no.
Yes.
Now we have to decide the incomes which are eligible for this benefit and conclude the question. Let's talk about country A. Go and identify what are the incomes that you have earned in country A. House property was country B, business was India, saving account was India. So we have agriculture income of 72,000 and we have royalty income of 8 lakh rupees. Will we write 8 lakh 72,000 here? Then what will you take? You tell me. I am not writing anything. This is your real talent. If you can do this question, you can do anything. Haji? Agriculture income of 72,000 plus 8 lakh of royalty. So you are not getting 872? 30,000? First of all, you have taken deduction of expense. You have not offered 8 lakh to tax. You have offered only 730. So you have to take that here also in your eligible amount for relief. Correct? So then calculate on what? 8 lakh 2000? No. Against this, we are in which regime? Right now we are in the old regime. So we have taken 3 lakh deduction also. 5 lakh 2 is your only correct answer. Anything else is wrong. Followed? Let's talk about country B. We have two incomes. House property income and dividend income. House property is 330 and dividend is 225. So 555? No. Even if house property rental income earned is 330, in India we have offered to tax only how much? And thus we have paid tax only on 224. If we have paid tax only on 224, then we will get benefit also only of 224. 224 plus 225, 4,49,000. Are you understood? So very good. Tell me what is your relief in country A as per normal 502 into 12% and 449 into 20.72. Tell me the total of these two. I don't want the individual amounts. Anyways, that part is a calculator part and not an explanation part. Just tell me the total. 153. Very good. And now come to the new regime. Let's talk about country A. You still have agriculture income of 72,000. You still have royalty income of 8 lakh and you have still taken deduction of 70,000. So can I say it will be same at 5 lakh 2 only? Then what will be the answer? Why will this be 8 lakh 2 this time? Because while this 72 is as it is, 8 lakh is as it is, this expense is also as it is, but can I say this 3 lakh we will not be taking, and accordingly 8 lakh 2,000 will be our answer in the new regime for the purpose of eligible amount from country A. And as far as country B is concerned, there is no change because dividend and rent, both incomes are same in old as well as new regime. The only difference was chapter 6A. Anyways, so calculate both reliefs and give me the total relief under new regime. $181. Are you sure? $181,460. Sure, no? Can I say this is your relief in old regime and this is your relief in new regime? And thus, if we now have to calculate our final tax liability. What was our tax liability as per normal regime? 390,520. From this we will give this relief, and under 115 BAC we got 424,320. Just once again check this 181,460 please. I am somehow not comfortable. Huh? Then you should take 18.99 and that is only the correct answer. If it is 985, then it has to be 18.99 that you have to take. So obviously this will be 18.99. You cannot at CA final, you cannot have, you cannot say that, sir, I don't know कि 5 से ज़्यादा होता है, then it has to be taken to the upper number. It will be 18.99 here also, here also, here also, and accordingly 181,505 has to be your answer. Minus 181,505. Please tell me. Final tax in normal. And final tax in 115 BAC. Obviously, this being lower of the two will be our final answer. Are you understood? If you can do this question on your own without referring to anything on your own, then you can do anything. Anything is possible in DTAA. The Gita, Quran, Agam, Bible, Guru Granth Sahib, whatever holy book you follow and refer to, this is that holy book. And I will be identifying such questions chapter after chapter. Shall we go ahead? Chalo. We are almost done because the other questions are very easy and small. Question number 7, please. Please read.
A resident assessee earns a foreign income of 78,800, out of which 50% is eligible for a deduction under Chapter 6A of the Income Tax Act 1961. The foreign income was also subjected to tax deduction as source in the foreign country, with which India has no agreement for avoidance of double taxation. The assessee claims relief under Section 91 of the Income Tax Act 1961 in respect of the whole foreign income. Discuss the contention of the assessee with reference to the provision of Income Tax Act 1961.
Assessee has foreign income out of which he has taken deduction on 50%. Still he wants relief on the entire income. Is the contention valid? 1 mark answer. Is not valid because you get relief only on the income on which you have paid double tax. So if you have taken deduction, we are almost done with the entire chapter. If you have taken deduction against foreign income, then you will not be eligible. Correct or no? Question number 8.
Question number 8. Cosmos Limited, a company incorporated in Mauritius, has a branch in Hyderabad opened in April 2021. The Indian branch has filed with the return of income for the fiscal year 2022-23, disclosing the income of 50 lakhs. It paid tax at the rate applicable to the domestic company, that is 30% plus cess on the basis of paragraph 2 of Article 24, non-discrimination of the double taxation avoidance provision between India and Mauritius, which reads as follows: the taxation on a permanent establishment which an enterprise of a contracting state has if the other contracting state shall not be less prohibitively levied in that other state than the taxation levied on enterprises of other states carrying out same activities in the same circumstances. However, the AO computed tax on the Indian branch at the rate applicable to a foreign company, that is 40% plus cess. Is the action of the AO in accordance with law?
Some are like, sir, please do that only. No, Indian, foreign, whichever is lower. Nahin. Huh?
The AO is correct.
Let me explain the question. For those who have not, acha, you all have understood the question that the AO is correct. Then I'll go ahead. Listen. It's a question on bilateral relief because there is a treaty. Under bilateral relief, which part?
Non-discrimination.
Non-discrimination. That we will not tax your people more than our people. Still the AO levied 40%. That means it's a violation of non-discrimination. Non-discrimination clause is not applicable to corporate assessees, and thus corporate assessees will be liable for higher rate. Correct? And thus the action of the AO is valid in law. Followed? As and when 10 o'clock comes closer, efficiency level automatically increases. That can be seen. This is required at 7 o'clock. If I am saying good morning, bloody hell, nobody's interested. Can you see me clearly? Can you hear me? It is like I am talking to the laptop. But someone else will say. So subah he is waking us up and he expects us to answer. But as and when we come closer to the end of the class, you show. So at this stage, if your efficiency levels have increased, it gives me a strong feeling that I should take till 10:30. So there will be more efficient learning. Nahi? Chalo, let's go to question number 9.
Amira India Limited has turnover exceeding 400 crores every year. For the previous year, business entities, the following incomes were noted from the on-state income account of the taxpayer. Income from business in India, 28 lakhs. Income from business in a foreign country, in whom India has a DTAA agreement, 21 lakh 60,000. According to the DTAA agreement, 21 lakh 60,000 is taxable in India. However, it is also to be taxed in foreign country at 11.85%, which can be set off against Indian tax liability. Find out the Indian tax liability for the associated with acquisition. Ignore section 115BAA and 115BA.
Answer what I am asking you. Unilateral relief question or bilateral relief? Under bilateral, which part? Under bilateral, which part? Tax credit method. Both countries will take tax, but one will give you credit. So question will tell you that there is tax credit, and question will tell you that India is giving credit, because treaty will say so. So what are you required to do? Calculate the total income and tax in India and give the credit of foreign tax. It's a very, very easy question. We have got Indian income of rupees 28. We have got foreign income of rupees. So in the absence of any deductions, the net income in India is 4960. On that you have to calculate tax. Now wait, I do understand that I have not taught you tax rates of company. This is Amira India Limited. Don't apply slabs. While I have not taught you tax rates of companies, I would just like to mention this much, that companies don't get slabs. They have a flat taxation, flat rate of tax. Okay. You have to ignore BAA, BAB question as said, so old regime, and in the old regime, companies, there are two options. Companies with a turnover up to 400 crore, the rate is 25%, and companies with turnover more than 400 crore, the rate is 30%, and that also you have to see 2 years ago. All that will be discussed with you in MAT chapter. Here the question is clearly mentioning the turnover has always exceeded 400 crore. The reason why that line is given is because the question wants you to calculate tax at a flat rate of 30%. Because the turnover has exceeded 400 crore, tax will be 30%, and as per old regime, because question is telling you to ignore the new regime. What is going to be your basic tax? 1488, flat 30%. Will there be rebate? No. Individual only, and that also income has to be up to 5. No surcharge. By the way, at 4960 there is no surcharge. Even if it was more than 50 lakh, there will be no surcharge. Surcharge for companies and firms comes only after 1 crore. So all we will do is add HEC 4%. What is your total tax liability? Mark my words. I am calling it total tax liability. Total. What's your total tax liability? 520. I am not calling it final liability. Terminology is very important. This is total. But from this total, am I eligible for? You can call it bilateral relief. You can call it foreign tax credit, FTC. Internationally, many a times they write this term, foreign tax credit. What is the bilateral relief available to the assessee? Foreign income of 21,60,000. Will you get relief on 21,60,000 or entire 49,60,000? Why? Because you have paid tax only on 2160 at 11.85. You give this relief, and this will give you, observe the terminology, final tax liability is this. What is this? Liability. If the assessee has already had any TDS or advance tax or anything, we will adjust that also, and then the final amount can become payable or refundable. But this is my liability. Prepaid taxes to be adjusted, this is my liability. Whatever be your answer, you can romance your calculator all your life. Ladies and gentlemen, boys and girls, that was our chapter called DTAA. Thank you very, very much.